to another day for the stock group. Let's see what happened this week in the market. Let's start with the Dow. So we took the last 5 days here, pretty much sideways here in the Dow. Started the week a little higher and a little lower. It's just real sideways. Ain't too much happening. Here. Let's look at the NASDAQ. Look at the Qs as a proxy for the NASDAQ. Yeah, NASDAQ actually had a good week. Started the week at 376 and at 381. So 5 points there. Let's look at S&P 500. Kind of looked like that NASDAQ chart, but closed down yesterday. Coming off a good base though, about 3 weeks ago. And then let's look at the Russell. Russell is small cap stocks. So Dow is the industrials, 30 industrials. NASDAQ is mostly tech stocks. And then the Russell is what they call small cap stocks. And capitalization, again, is just nothing but number of shares outstanding times the price of the stock. And that's a way to size your company. And so I think companies that are under, maybe 30 million are considered small caps. I have to look up the actual definition, but there's a cap number. So you got small caps, mid caps, and then large caps. So your large caps are big companies, Apple, Google, like that. But there's a number. Small cap maybe. Truly. Yeah. So generally, a small caps company generally with a market cap between 300 million to 2 billion. Right. And then mid caps are probably 2 billion to something. Then large caps is, another variation higher. Yep. So here it says small caps, and so large caps is 10 billion or higher. And then mid caps are from that 2 billion to 10 billion. So 300 to 2 billion small cap, 2 billion to 10 mid cap, and then greater than 10 billion large cap. Okay. So, and again, why that's important is most often than not, whatever category your stock fits in,
what I look more into them,
it's gonna be actually in there. So it's kind of a rundown for the different industries. Let's look at not industries, but the overall sector that your stock is a part of. So let's look at some of them. So we just talked about big cap. Apple is a big cap stock. Large cap, big cap, same thing. So you can see Apple is coming off a good base here, extending the last week's gains. Still higher, typically Wednesday, Thursday, and Friday. Let's look at another one. I don't know if any of y'all heard of Kathy Woods. She's a money manager. She has several funds called ARK, and they all begin with ARK, and then they have F, G, K, Q, and W, and X. So they're different ETFs that she's created, her and her company. So this is financial innovation. So this would be like a tech related. So you can see here, based upon NASDAQ having a decent week up, this stock is kind of trending as well. Let's try to find another large cap that's not tech, because you got some tech stocks that are in the Dow, which is industrials as well. So let's look at a good one here. Let's look at Caterpillar. Caterpillar is a and industrial. Actually, Caterpillar, you can see here, you're down for the week. So that Dow chart was showing sideways. So this did even worse than the component that it tracks. So it's even worse. So you can see it's hit a high back on August 25th, but it's kind of been down, last 6-7 days or so. Let's see. I'll go to give an example of a small cap. Let's look at CLSK. CLSK is a small cap stock. This is a company that does like electrical grid components and software, as well as some Bitcoin mining. And so they're sideways to up. So they track again. They would be more like the small caps there. So let's see. Any stock we want to look at of yours before we start going through the list in terms of what we've owned?
Yeah, Mike, check out BT.
Bit Digital.
Mm-hmm.
All right.
I actually bought some about maybe a week ago, 2 weeks ago, at about 18. As soon as I bought it, it dropped to 12, 11. And while it hit support, I'm buying some more on its way up.
All right. So let's just draw support and resistance lines here. Valley there, won't draw that one. Took that bottom there. Actually, I'll move it down a little bit because so you take this general area, that general area, this general area, and that one. So you see you got 4 points on that. Take this top and this one, I'll split it the difference using this recent low and that high there. Take this peak here. I'm sorry, that bottom, take this bottom, and then take this last bottom here. All right. And I got some discretion here. I can put it at the very bottom, or I can just put it right here where it's closer to those two bars are together. So I'll just leave it there. All right. So now with that charted, let's see what we got on our levels. Yeah, so it looks like it hit a top here in January of 32, hit it again, 32, kind of came down. Oh, well, shucks, let me not. You tell me what's going on with this chart, Kyle. I just drew it, so you tell me. Are you on your phone or on your iPad, Kyle? All right, you must have dropped out. So I'll finish. So it looks like since this February, we know the market had a big drop from February to March, rebounded a bit, kind of went sideways, but you can see we're still in a downtrend from this point here. So I'll take that point and I'll take the point on this candle here, and then I'll just let it extend out. So we're in a downtrend up until so something big happened in July. Don't know what that was. And the reason why I say that is look at all this volume here. Look at all the volume here to the left. That's really, really low. But then on July 26th, something happened and the volume exploded. And you can see that there's a lot of interest, and it corresponded with this price. So we were down here at $4.23. This one bar took it from $4.23 up to what's that? 8. We closed at 887, and then it just continued to run up until got to 19, and now it pulled back. So you got to pull back here to this 1025 area. We just said 11, and then just kind of going sideways there. So,
hey, Mike, can I interject right quick?
Yes, sir. Absolutely.
All right, you brought up a key point, and as I'm learning, you said something that I think is real important. You said something major happened. When these big movements happen, is there any way to track something like that? I mean, besides just looking at the chart, you can't tell that.
Well, you actually can, because
Okay.
what you can see here is this. So look at, I'm gonna just draw several of them here. So look at that.
Or am I trying to overanalyze? I don't need to know what happened, but something major happened.
Yep. So just look at all these volume points here.
Right.
That I'm drawing.
I guess what I'm trying to say, what would trigger that? What's the trigger for this?
It could be anything. They could have had an announcement. They could have had some kind of news or whatever. But you can see this volume. So these last four, let me just draw a box around it. So just look at this volume in this area here. And when I say volume, what I'm referring to is these bars down here at the bottom. This shows a volume. So you can see everything in the purple box here. Right. Versus look at the volume that was happening prior to that. Exactly. Very, very minimal. Yep. And then you got a bunch. And so and it's something that's implied in this, and we know it. Okay. But sometimes we don't necessarily correlate it. Only thing that make a stock go up is you got more buyers than sellers. Right. Make a stock go down, you got more sellers than you do buyers. Right. And then when you have volume on top of that, now you're gonna say something must have happened, because just days before, weeks before, months before, you didn't have that kind of volume. Exactly. In stock. And then here you had, I don't know what that percentage is, but you went from 0.21. Like, so you probably had, I don't know, 20, 30, times the volume than what you normally had at this point. So we can just look at it. So it looked like there, that's, so here you can see this is the volume amount here. So if I go back, looks at what looked like we were right at. Let's see. I can't do the, so it's looked like 2 million shares. And then here it went up to, is it like 12 million or 123 million? Looked like 124 million. So you had a 10x in volume here, just on that one bar. And then but even if you just remove this big candle here, this big candle, and just took more of the average, that's what this, so let me move this up a bit. Change my drawing tool. So move this up a bit. Even if you exclude that big candle, this big green candle, but just look. So what this is, that this orange kind of shaded area, this shows the average. So you can just see the average up of all of these, significantly from where it was in the orange down here at the bottom, right? Yeah, so, so I don't, now I can go and find the story in terms of what happened truly, what's the narrative for this move, right?
Yeah, what's driving that?
Yeah, what's driving it. But the people are showing me that there was big news happening, because the stock price is up, the volume is up significantly, and and I can see what people did, how they voted with their money, right here, versus how they were voting with their money before,
prior to, right.
So that's that one. All right, so let's look at our sheet here. Move this over. Okay. So, Kurt, you had this SEDG, but I think, did you want to sell that and get something else? Because Brenda mentioned something last week.
Yeah, because I don't really like it now, but I want to hold on to it for now, because I think it's trending down, or it might start coming out. If you can bring it up, we can take a look at it and see. But,
yes, sir.
But after doing some more research, I'm not really too big on Solar Edge.
Okay. So just looking at where we are,
but I
low in May, kind of sideways, off of this support area at 231. Right. And then we got a good bounce. So even here, you can see here, earnings came out, got a bunch of volume here. So it took you from that 258 to this 300 level. But then they gave all this back up, came all the way back down and touched here August 19th, and then it bounced again. Right. So good. It's just in this range. And so if you think, again, we just use our boxes here, you can see this is the range that it wants to trade in. drawing to here. Sorry. Yeah. So you can see it's trading in this range, right?
Mm-hmm.
You know, whereas before this was a range that it was stuck in. It broke out briefly, but it came back and it kind of lived within there. And what's significant about the range that we're in now, we had a prior level where it traded in that.
In that range, right.
You see what I mean? So you kind of see how these boxes line up when it breaks out of an area, establishes a new range. And the longer you have or something that goes sideways is either building stability and it's going to use that to bounce above, or it's breaking down, it's going to use that to fall below. So you can see here it was going sideways, couldn't hold it, boom, earnings came out, new low, kind of established here, went sideways, and then, you know, probably 8-10 days later after that earnings, bounced out, got back into this prior area, went sideways, bounced up again. So you can even say that, you know, you can just look at and chart it like this and say, hey, look at that run. It was over. Then it kind of came sideways, kind of came down, broke it. But you can just say that was another run there. Then you can say
earnings came out.
Right. New run. And then we're just sideways again. So you got, you know, another up and down. So you know, so it's in a decent area here. You know, so just so you looking at this. So let me stop giving commentary on it. You looking at it. What do you see?
Again, like you just explained, I see it going up and down, and a lot of that is being driven, I guess, by earnings. And that's what I saw when I actually pulled it up. I was looking at it yesterday via Market Watch, and I saw that it opened up high and then it dropped down low. I don't know what all that means, but it is bouncing. Yeah. But I'm not really sure about this one, and I don't know what's driving it. I guess that's my key thing. I'm trying to figure out.
Now, one of the things is if you want to, you can. So there's a I think it's stock tweets. Yeah, so it's a app you can put it on your phone where you have it with you.
Stock tweets. Okay.
Yes, stock tweets. And twits. Yeah.
Twits. Gotcha.
Yeah, and so what was that? CDG. All right. So a lot of times, you know, guys will have, you know, different opinions about it. You see what's going on. They may talk about the news. Right. And so can give you some idea of what's going on. You can use something like this, or you can just go out to Yahoo. You just want to get some narrative on what's happening with the company. Why are they doing it? And one of the things, you can just go to the stock itself, and to the company itself, and go out to their website, because a lot of times they'll do press releases. They may do so here's talking about the conference call. So here's a conference call of stock twits. Okay. Of I'm trying to say Solar Edge. You know, and they may say, you know, what the company did, you know, blah blah blah. Recently disposed of shares, some VP, you know, did something on it. So, you know, just take a look and try to find out what the story is for it.
And then try and correlate that to the candlesticks.
Yeah. And well, at least it gives you, to me, I trust the movement of in the stock, and I see what they're doing with their money. Right now, sometimes I may go look and see what the narrative is, and you can. So it really depends on how you want to do it. Are you more of a what they call a fundamental person, or do you do more technical? So all, you know, pretty much what we talk about week to week is the technicals, where we're reading charts, looking at patterns and stuff like that.
Exactly.
Now, if you want to go more on so when I say go out, look at the press releases, look at the earnings, the financials, and all that stuff, that's more of a fundamental analysis. And there is a whole slew of ways and stuff to look at that. So, like, if I go out to,
I would consider myself a combination of the two, Mike. A little bit of the technical. I'd take maybe 3 or 4, I guess, statistics from that side, and combine that with the news earnings and stuff like that. What's going on in the world?
Right.
Try and formulate a opinion based upon that.
Yeah. So here's a good site to come out to, Seeking Alpha. And what it can do, it can give you, if you want to look at the financials, right? And then you got different people giving commentary as well.
Right.
So this is a good area. So if you want to look at the financial statement, it's a little slow this morning, but okay. So you can see revenues, expenses. You can get an overall view of the company in terms of what they do. Some of the statistics.
Right.
How many shares outstanding, what the valuation is from, what's their ratios. These ratios have meanings like what's your gross profit, how much revenue you have, what's your net income, how much, and then looking at your balance sheet in terms of how healthy is the company, how much cash they have,
right.
How much debt that they're in, and then between short-term debt, meaning a year or less, or long-term debt, meaning debt that's extended out beyond a year. So, so you can, look here and find more information. Then it just even gives you just a profile and get a little bit more information in terms of what they've done. You go out here to these SEC filings. You can see, quarterly report. These are pretty interesting to read, these quarterly reports, annual reports, and, you can get a feel. And one thing I would say, if you listen to the conference calls, those are pretty good as well, because you can find out a lot of information of what's going on with the company, because every quarter that they have to report,
right,
they provide a conference call. And in that conference call, so here's a slideshow, here's a earnings, so here's the presentation, earnings call presentation. So this would be the conference call here, and you'll get a sense of, hey, what it is that they were doing. So they even give a slide deck and they tell you about, the numbers, electricity demand is on the rise. Now you have to, measure this because this is the company's perspective and this is what they're seeing. And so they can give you insight to how they're tracking the business, what they see in the market and how they're trying to take advantage of it. However, a lot of times, how it reflects in the stock, sometimes it may not reflect accurately. Sometimes it's undervalued, sometimes it's overvalued, but it just really gives you a good understanding of what the business is doing and how they're trying to execute their plan, and in different facets of it. So this is definitely a good thing to take a look at if you're definitely interested on that kind of fundamental side. All right. So let's see. So you say you're just going to hold on to that?
Yeah, let's just hold on and see what it's going to do between now and next week.
Okay. And
I'm going to watch it throughout the week too.
Okay. Let's see. Because I think she said you was going to close your shares out in that one, but that may have been because initially you didn't start with
no, I didn't.
Solar Edge. I think you had
we just picked one.
Yeah, there was another one that you picked. I can't remember what it was, but I'll go back through and look at it. All right. Cool. Thanks, Kurt.
No, thank you.
All right. Okay, we got Vanessa, Milt, and Brenda on. How you all doing? Well, it's Andre. Take a look at Andre's stock. I know he got this Fubo. He actually owned this for real, but let's take a look at Fubo. So he was asking me for a stock, and I told him, say, hey, buy this Fubo, buy it in 25. He did. I say sell at 28, and he called me the other day. He's like, this thing's still running past 28, and I got out. I was like, my bad, dog. So it got beyond this 28 range here, and it's still running. So it's up to 30. So he left a couple bucks on the table.
That's a good point you just brought up, Mike. You suggested that he sell it, but however, you don't want to take that risk neither of it going down. So I think selling was a good move.
Yeah. And so in here, I was just really trading this. So if you look here, this is the 25 to 28 range. Mm-hmm. And you can see how many times it was just staying in that range. And so you got an outlier here where it broke out before and it came back. And now we're experiencing some of this again where we're in a new area up. Now, one of the things is that let's see if this continues to run. Now, and if it just continues to keep going sideways and it stays above this 28, as we get more candlesticks to the right, we may just say, hey, it may establish a new range and the base may be 28, right? So we'll just have to see. But even on this trend line, it's respecting this trend line here. And so long as we don't close right now below the 2940 area and it continues to obey this trend line going up, then those that may be following it or in it, if you got better entries below, you can keep riding. But you can use the same technique on stuff that you're doing in the stock. So say you're in a stock and you draw a trend line and you see it still going up and to the right, you can just use this trend line as your marker to determine, say, long as it stays on the top side of this red line, keep holding it. If it comes down and it breaks and you're just trying to take profits, if it breaks, then you sell. So we can also look at this trend line in reverse to the downside. So if you say here, draw it there. Oh, sorry, it's wrong tool. So here on this trend line, say I'm gonna draw that one, and the trend lines on the bottom. If I want to make this technically correct, you take 1 point on the bottom, so that's the first point. That's the second point. On the top, you take 1 point on the candlestick connected with a second point. First point here, second point, and then you just extend the slope of the line, right? So in this case, when it hit this high coming up off of the earnings, it went up real big, but you can see it couldn't sustain it. So it just started, falling down. And long as this stock continued to stay below the red line to the left side of it, it was that downtrend was confirmed. But then it broke. So you can see this bar on August 23rd, it broke above that trend line. And then it just started a little baby trend, came back down, and then here, and then we got this second trend here. And that's when it broke out above. So going down, you can say, hey, continue to obey this trend until it stops working. And you'll know once you get a close to the right side of the trend line on a downtrend. And just the opposite on an uptrend. You draw the uptrend line based on 2 points on the candlesticks from the bottom. It's going up and to the right. All these candles here are still obeying this particular trend. You don't have anything to the right side of that trend that's closing. So as long as it continues to go, you can use this trend line to be your marker. Now, it's easy to look at this in hindsight because before I was obeying this purple bar from the 25 to 28, but then it broke here, and now because if we did it real time. So look. So that's all I could see at that point in time. So I said, hey, it gets up here, it gets beyond 28, I sell. It got there. I told him to sell. He sold it at 28. But this is just happening every day, right? So the next day it's like, oh, it's still running. Next day it's still running. Oh, next day it's still running. Then I said, now I got enough data to be able to chart it. And so now it looks like here that exit out of the 28 was a mistake. But real time, this is what I was trading.
Exactly.
Right. So,
Mike.
Yes, sir.
Let me push back. When you make money, it is never a mistake. I'm a firm believer in taking profit.
Okay. All right.
Right.
Appreciate that, Milt.
Right.
And that's it. And that's what Milt said is vitally important. Very short statement, but extremely important because at the end of the day, your buys and sells, what you want is for your account to be higher over some period than it was before. And so taking profits can always ensure that your account is growing. By the same token, keeping your losses small and not incurring big losses, it's also a technique and a strategy that you want to employ because you could be in a stock and take huge losses and that wipe out all your little smaller gains that you may have had before. So managing your portfolio is a whole, skill that you need to try to understand and kind of master. And it takes time. But to Milt's point, taking a profit is not bad. Never bad. And here's the thing too. Some people, so like it's funny. So I remember a guy, we were talking about a stock and it kind of broke out above his range. And he's like, oh man, I'm missing this money. And I was like, yeah, but you took profit and you made some money here. So, and I always ask this question. Are you a person that, regrets opportunity that you missed? Or are you a person that if you actually lost the money, it hurts worse? So is it the missed opportunity that hurts you worse? Or is it the fact that you've realized the loss that hurt worse? And sometimes you would think that everybody would say it's the real loss that hurts worse. But for some people, if they miss opportunity, they kick themselves, even harder. So that's where your own personal psyche and how you look at this stuff and what your own personal disposition is for risk and all of that and profit. You need to know that about yourself because it can drive a lot of your decisions. So thanks for that comment, Milt.
Yeah, that makes sense to me.
Let's see. So that was Andre. So Andre, so what I told him to do is, hey, if this thing comes back down, this 25 area, buy it again. So I'm looking forward to revisit. Now, it may not. And again, if it continues to go, higher or to the right, continues to bait this trend line, we may have to define a new area and look for another entry point higher. But we're going to give it some more time and see there. All right. So, Brenda, you had Facebook and I think she had another stock. Facebook and Ali. Let's go to Facebook. All right, Brenda, talk to me about this chart here.
I'm sleepy this morning. I've just been happy with Facebook since tech stuff still seems to be in favor with folks. So even though it had a little bit of a dip there, I'm still holding it just to watch it and then to watch to see if it hits below that line there that you got.
Yep. And so just for the trend line, all I did, this is the first point that I used right here. And then this is the second point that I used right there. And all I did is just attach those two and just kept the slope of the line the same and then just extended it. And so you can see here that Facebook, this is the first actual close above that trend coming back to this August 21st. And it's because you just had, these 4 days of sideways to down. So, so it can, so in this case, you can just follow that trend, but you can still see that you have your horizontal support here at 370. Right. And, you can see if it's gonna obey that, if it's gonna continue to break below that trend, if it's gonna hit this first level of support. And so, Brenda, let me ask you, are you a trader in this stock or you're long-term in this stock?
I'm generally a trader. I've had it for a while and I've actually had a good run. So that's why it's no biggie for me to wait and see if it's going to hit that 370.
Okay. Good. All right. Let's look at your Ali. Oh,
yeah. And that was an earnings, which, people are not happy with that. So you can kind of bail out on him.
Okay. You want to sell this?
Yeah. You see that earnings call?
Oh, yeah. Yeah, they got crushed here. And so look, let's kind of combine that with what we talked about a little bit. So you can see here, trading here, some big news came out, but look at these volume levels. So you got one, sorry, get to the right tool. So you got this. Why is my volume not coming up? Oh, okay, there we go. So you see here, you got that volume day here. But look at this volume day here. Right. And then you got another volume day. But you can see these three volume days got a higher volume day. So it's anticipation. Well, actually, this was the earnings. So got a lot of sellers on heavy volume as compared to what you had to the left of it. And then that follow-up day, much more sellers coming in. And so now let's look at that in relation to where we are on the chart. Trying to see how far we need to go back to find some support there. So actually look here. Look way back in May. You see, we had a little point there and we dipped on that huge run up off of these earnings here. And look how this correlated from back in May, that same area to where we stopped right here, right? And let me redo these because once I drew it, sorry. So you can see here that it revisited a previous low area. Let's just draw the rest of these. Now, what you can do too is we're on a daily chart, and so I had to go back pretty far, but you can just go up here and click and go to a weekly, and you can get a longer sense of the trend. So you can see here where we drew that little area right here on that daily chart. We got really close here on the bounce. Then we can see that we have, other areas here as well. So just in terms of where it's been, and if you want to draw a longer trend, say from here, this is on a weekly, we'll take this one and then this one here, and we'll just extend that out. So on a weekly trend, you can see you're still down, but look at this here, just in terms of this range. So we're in this range. I can draw this first range here, and I could even extend it, this secondary range a little higher, right? Just make that one yellow. All right, so you got that first purple range, or orange, should I say, was from the 95, anywhere from the 81 to 95, and then you broke out, and then you got this range right here. So with that, it's just down.
Right, exactly.
So
I was following that short run up right before earnings, because I was only doing it as a speculative earnings trade anyway. So I'm not a fan of it. So I was following that short up run there that they were doing right before earnings. And so once it broke that lower bar there, I was like, yeah, people are not happy with it. So, no point in,
one of the things I will say even on this sprint is watch it. It's going to be interesting to see, because so let's just talk about this here. So this is on a weekly, and look how big this candle is, right? So when you have what this call is a bottom, a lower tail or a bottom tail, you got a long tail on this candle. What that really means, and that's on a weekly. Let's look at the day. So this is a daily. So you had this drop here and this drop here, right? So you had a bunch of volume lower here, but look at the next day. So even where it closed on this day at 65, it opened the very next day at 72. So this whole day's move was bought back up. So you got a decent level of buyers on this green bar, and then you got some sellers that came in. But what's really interesting about this is that you're still tracking sideways. Now, could this go lower back to 64? Yeah, but you got some price where people are making a bunch of buys and sells in this general area here. And if this just continues to go sideways, or even if it retests here, you really want to use a 64 as your marker in the sand, because if it can just go sideways, if you look back maybe 6 months or so, either one or two things is going to happen. Either the thing going to go lower, or you're going to see it building out above 64 as a base, possibly to go higher. So it's just something, to keep in.
Yeah, that was my thought, which I was like, okay, if I wanted to play with it and get back in, then I would watch to see which way it's going to go. Yeah, to what you were saying there, it's like, people aren't really sure of it at the moment. And since it's not a long-term holder for me, I was like, let me see what they decide to do with this puppy, and then I can figure out which way I want to go.
Yes, ma'am. Yes, ma'am. All right, let's see who's next. Thanks, Brent. Dick, Curtis, Kyle. I brought up that BT for you, but I think you had dropped off. Let's see what you got.
I'm still here.
Okay, let's look at your Neo. Let's go. Neo. All right,
it's hanging in there.
Yeah. So Neil, talk to me about this chart, Kyle.
It was on a little slight downtrend. However, it didn't hit support, and it's on its way back up.
Okay.
So support about let's see if I can see support about that 36.71.
Okay.
Is where that support is. So that's why I said and it went down a little bit, but it's headed back up.
All right.
Neil's long term. That's long term.
Are you want to continue to hold that or?
Yeah, I'm gonna hold that.
Okay. And Brian, you want to close that ollie out, correct?
Yeah. Mm-hmm.
All right. Let me put it in here. Okay. Got it.
Hey, I'm actually looking at a new guy, SFT.
You want to add SF?
Yeah, sure.
NSFT?
No, just SFT. Shift.
SF. Oh, okay. Shift. Okay.
Yeah, another short-term speculative. I don't know a lot about it, so I'm only just lightly watching it.
How many shares you want to buy that one?
You can just swap it out with what I have left from Ollie's. It's fine.
Okay, so it's half. All right. I'll fix that later. Okay, cool. Back to Neil. So Kyle, buy, sell, or hold on Neil. You want to continue to hold? Or you want to buy?
We're gonna hold that.
Gonna hold that, Neil.
How much money I got left?
Let's see. 1,000 there on the Neo. I know you bought some more this week on it.
Couple weeks ago.
Yeah, a couple weeks, and then you got that Neo here. So looks like I get about $2,000 in it. Let's see if you got any. Looks like you got about $4,000 that you used up already. So you probably got about $900 left or so.
All right, give me some BT.
Okay.
Whatever you can buy that's left over.
All right. Okay. All right, we'll do. Cool. Let's see. Next up, we got. Now, let me ask you this: in terms of we're going through these, are you all using any of this stuff to actually make some trades based upon, this analysis, or are you using some of these techniques in your own personal portfolios? Because that's the reason why we started to track these stocks. But track some stuff that you actually own, and I want you to be able to use what we talk about, as you do your analysis and you give justification for it. Use this information to actually make decisions. That's really what this is all about. So are you all using this information, these techniques, to actually make trades in your portfolios or add to your positions if you're long-term holders?
Yes.
Okay.
I am. I actually have to BT, and Neo. I actually own those.
Okay, good stuff. What about the rest of you?
Yeah, I've been using it. Like I said, sometimes I do the speculative things on the earnings just for playing, but like for my other ones, like the Facebook, and I have a couple of others that have been holding for profits. I'm waiting to see when I want to get out, and I'm trying to be better at mindful of the candlesticks and all that other stuff to see when I'm going to let them go and not let them keep drifting down and lose all my profits.
Okay. All right. So thanks, Brent. Milton Planetary, talk to me about this chart here, sir.
Okay, so I don't know if you remember way back when I said I was going to buy it if it breaks out on volume.
Yes, sir.
Which is pretty much what we did last week.
Okay. In
real life, as you know, I'm playing this by options. So
yes, sir.
I overread myself. I'm up there at 2750 expiring next week.
Okay.
And I'm still liking that.
Okay.
Even though it's slowly going up, but I sort of like that right now.
Okay. So the trend, so you just extend this out. The trend is still intact, from that, and it broke above this range that we were in here. So let me just color this in for everybody else. So it kind of broke above that range. We were still in it. And then we had this volume, pretty decent volume here when you look at this last, 2-3 weeks. Third highest volume here on this bar on a breakout above that 25.86, and it still continued to go up, and it's still riding that trend up. Kind of came down and touched it, broke below it, closed above it, and then just continued to respect that trend. So Milt, so what are you doing? Because you sold a what, 27.50, you say, on the options?
Remember you bought some for me last week.
But yes.
Okay, yes. Okay, I'm sorry. It's real what I'm doing in real life and what I'm doing here. We can just talk about the real life piece on it. Yeah. Okay, so I have a 27.50 put on this.
Okay.
It is gonna expire on Friday.
All right. How much premium did you collect on that, Milt?
Do you remember? I don't have it with me. It was over $1 something.
Okay. So the benefit of others, what Milt. So let's use an example here. Well, we can use this one, right? So let's go back. So here, this stock is trading at 26.64. So Milton say, I want to buy this stock, right? But I don't want to pay full price for it. So what he's using options to do is to sell the option at a predetermined higher price, and they're going to pay. So he said they paid him $1 at the time that he put the trade on. And if long as the stock closes below where he put the sold the put at, they're going to put the stock to him at that 27.50 level, but he's going to keep the dollar premium. So it's a way for you to sell a stock and basically buy a stock on discount. That's probably the easiest way to say it. So let's look here on it. I'm going to show you the options chain here. So let's go to PLTR. So this is a little advanced, but it's good to talk through it. So let's just say if I were going to buy 100 shares of the stock, right? So if let's just put it in. So if I say 100 shares, if I was going to buy 100 shares of stock, and let's say I can get it at this price, it's going to cost me $2,666.26.69, right? So that's what it will cost me. However, if I go over and I look at the options chain, all right, let's just pull up the options chain, and I'll just use here. So I can say, as opposed to paying that 26 and some change, I can go here and sell this same. I can sell this for 40. So basically, I can get 40-cent discount per share on each. So I can say basically, I can sell this. Let me make sure I say it the right way. So if you take this 39.35, you add a zero to it. So really it's like $390. I could sell this option and buy this for $339. So if you take the, what we said, 266.9 minus 393. So basically I can buy that same 100 shares potentially for $2,366 versus the $26.69 that I bought. That's probably the easiest way to say it. And the way that he's doing it by selling a put. So it gives you an opportunity to buy, to sell something. Well, it gives you an opportunity to buy 100 shares of stock cheaper than what you could if you bought them outright by using a put option. Mm-hmm. That's probably the best way to say it. Mm-hmm. So again, if I were going through, I was going to buy them at $100 a piece. Keep hitting the wrong thing. Sorry. If I was going to buy them at $100 a piece, you can see here the $26.69. But what he's essentially doing is saying that, hey, so that's the $26.69, but he's taking off $3. So he's really buying these at, let's just keep the math simple. So he's really going to buy these around, 23.66. So I did it like this. So that's really what he's going to buy them for, $23.66 by selling that option, as opposed to paying $26.69. Does that make sense? So it's just a way to buy some on sale. That's just, so put it in just shopping terms. Go to the store, you see some, see a dress for the ladies. Hey, full price that dress is $100. You come in on Wednesday because that store does sales on Wednesday. You can get that dress for 20% off. In this case, you say $300 over $2,600. That's a little bit better than 10%. So in the dress analogy, you get that dress for less than $90. It's probably the easiest way to explain, how you would use an option in that way to get a discount. So was that like mad confusing or no?
Nah, makes sense.
Makes sense. Okay, cool. Yep. So good, Milk. So hopefully this thing doesn't continue to run such that because you sold it. Let me see. You sold the 20. Let's actually look at it. You sold the 2750. You said.
Yes, that's what I sold.
Okay.
Expiring next Friday.
All right. So yeah, so long as the stock is below the 2750, then he'll get the stock and he gets to keep the premium. So right now, the premium is $1, and some change. So he'll get to keep that premium there. All right. And so that's where this premium, it comes in, because that's what he'll get to keep when they assign the stock to him at the 27. But again, it's just a discount. That's the easiest way to think about it, because if I talk about it too much, I'll use a bunch of other terms that's going to make the example a little bit more confusing. But he's just going to get it at discount. All right, Milk. Anything else you want to track here, or any other stock you got?
I'm thinking about maybe putting a little bit more danger in there. So actually, this is a good stock. It's a good long-term stock, but it's a pandemic. So it's a little bit on the risky side. WYNN.
Wynn Resorts Casino?
Yes.
Yes, sir. All right. Let's draw the support and resistance on this. All right, so let's see bottoms here. Sorry about that, guys. Got a bottom.
Let me just throw this in there just in case. I hope no one's following my trades, but I bought it down there toward that dip you saw down there. So I'm already very happy. I'm just bringing this up because I'm looking to tap out.
Okay. All right. So you bought in this dip here at this 87 level.
Not that low, about 90 something. I should have brought the actual price with me so it'd be more accurate.
So we can say anywhere. I just put this in here. So you say you bought somewhere in here. Is that fair? Fair to say anywhere between 92, 95?
Yeah, because it was already going back up.
Okay.
I wish I had caught the bottom, but I never do. So.
Right. Gotcha. So what's your prognosis for this? Is this a trade or is this a long term? What are you thinking about when?
This could actually be both.
Okay.
I may keep part of this because my thesis is once this pandemic is over, people are going to do the roaring 20s again. And This would be a good stock to be in there. So I'm going to probably do a half and half. I'm going to try to probably, I hate taking the risk, but I'm thinking about that up there in the 130 area or something like that.
Okay.
but I may bail when it hit that 120 resistance.
Okay. Gotcha. So the ideal, if you have enough, if you can stomach, not selling at the 120 if it goes higher, and look for a little bit more and try to get to this 140, you will, but you may take some profits at 120 from your entry in the 90s. All right.
Let's just say will.
Okay, so you will. Okay, so let's say we split this. Say you got it in 93. So if you get to 120, you're talking about a 28% gain, right? So if any of you all remember our discussion last week in terms of the rule of 72, 28%, and divide 72 by 28, what you're gonna get, or about 3. So you're talking, if you can average 28%, this is just one trade. This is not even in a year. But if, let's say this does this by the end of the year, right? Gets back up to this 120, that'll be 28% on that, which is extremely good. It'd be extremely good. So, that would be great. And if you even went to this, if it got back to this 140, that's a 48% move from this 93 entry price. That's and again, with the thesis that he has that, get this Delta variant under control, get more people vaccinated, open back up, we may be able to get more people back into the casinos, and that's going to bode well. Because the thing about the casinos is they just got to have bodies in there. If they got bodies in there, people are playing, they're going to make money, because that's the way the games are set up in the odds in favor of the house. So.
Okay. So for conversation on that, because I've been debating on these puppies, and I played some of them after the pandemic and got some good profits. But so you're thinking now though with the new variants, right? And because we're getting some more restrictions in Europe for travelers and all the other good stuff. So would now be the time that you're thinking that it might have a turnaround? So with that big drop that it did over the summer, and now we're in September. So that's been my debate, right? For when to start playing these puppies again. So you think between, what are we at now? September through December or whatever, that people are going to start traveling again, even with the new variants popping up and restrictions?
Nope.
My thought process is really this, because I can hold for a long time. And actually, this is really a defined risk stock. You see that gap there? If it ever drops down in there, I'm selling. Okay. Period. And walking away. So I actually have in between that gap, that if it ever goes down there to fill that, I'm already out.
Okay.
So I have a defined risk trade here. I know when I'm getting out in both ends of it.
Right.
So the other part of the thesis is when everybody else is very fearful of something and give up on something, that's when you need to start looking at it. So I don't know when this variant is going to end, but I do know that it hit end of year first in Great Britain. And we're about the same level where they peaked and then they start dropping. So, but there's also another thing to go with this. Winter is coming. And that's flu season is coming up. So these people are not vaccinated. When you put some flu on top of this, we got a chance to go down again.
Mm-hmm.
So you got to think about all these risk factors. Right now, I have a defined risk trade. I know where I'm going to sell it at, both ends. If I sell it in that gap, I'm going to lose a little money and walk away. Just like Mike said, I lost a little. Oh well. And I'm going to still keep this on my radar because this is a good stock. Period. It's just that this is not a good time for this stock.
Right.
That's a good point. Go ahead, Brenda.
That's what I was thinking. No, makes sense. That's what I was chewing on.
Well, Milt, let me ask you this. Why wouldn't you hold on to it knowing that spring and summer is right around the corner? I can almost say that it's going to go up.
And I'm going to agree with you on that. But remember the other thing Mike said, take small losses.
Okay.
I have no need to ever take a chance in the stock market.
Gotcha.
I cut and leave, and I wait it out again. You see that level down there where it stopped at? If Mike could expand that out again, what I mean is more time on the chart. You can see certain things like, yeah, that's what I mean. That if I should have bought that dip, it wasn't on my radar to tell you the truth at the time. I should have bought. I should have been right down there at that dip, waiting on that sucker.
Right.
Yeah. So that's what I'm talking about. This wasn't on my radar. It's like Brenda said. You know, it was the variant, blah, 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 leave these things alone. Then I went, wait a minute, it's the variant. You have to think ahead in the stock market if you want to make money.
Okay.
That's some good commentary, guys. And that's the kind of stuff I want you all to be able to ask each other questions, you know, and figure out and put your thesis together. So even as I was listening there, y'all kind of made me think of something. So if we take all of what was just said, so let me just show you. So you can see here, we were trading in these range. We broke through it, went down, got this extreme low, established this range here. Once it broke down, so we were here, that's what they were doing. It broke down below. Then we came and we traded sideways on this range. It got some momentum. It broke up. Now we're back into the same area that we were in before. So drawing these blocks here, you can just kind of see and discover things as you go through, because you may not have had everybody. If you got some patient people here, they may not have sold out here. Some of them may have. You hope that they would and bought lower, but some may have maybe didn't. But you can see that. Look how this yellow box on the far right, it's obeying the same levels that they were in going way back to August of 18 and back up. You see what I mean? So expanding out. So I'm glad Milt asked me to expand out. Sometimes you need to go out farther than the range that you're trading in, because we were looking at this daily. But in order to get some perspective, sometimes you need to go in weekly to see, you know, are there other areas on this chart that's obeying? Because this gives a bit more narrative to what we were looking at here than just this, right? Because we were looking kind of micro level at this area when we first started talking about it. But when you expand it out, you can get more of the picture, right? So that's just the point I wanted to make there. Second point, though, is as y'all were having that discussion, so let's just talk through it. So we're saying, hey, the thesis is, you know, we're in the middle of this thing. Milt says you need to anticipate. You want to go right when everybody else is going left. You know, the Delta variant is spreading, you know, pretty significantly, you know, in the US right now. A lot of people are getting sick, hospital beds. So you say, okay, this is what's happening. This is a potential turnaround play. But if you take that and you go the other way and you say, okay, well, in spite of that, if we're waiting on that to rebound, what could we be looking at to get into based upon what's going on with the variant, right? So let's look at Pfizer. Okay, so look at what Pfizer have been doing with this variant, right? So you say March, right? So from March to now, we had a sideways action from May to July. And then from July, and this probably corresponds with the variant, the Delta variant, right? You know, June, July. Now, think about Milt said something pretty significant in his analysis of just talking about the overall what's going on with this virus. He said it started in Europe, then it went to India or vice versa. But I can remember a lot of what was happening in India and just the, you know, devastation that we saw there. And we probably had maybe a 3-month lead time before now we're seeing not quite as bad as it was in India, but it's pretty bad here now. And so as you can see that stuff happening, and even when I can go all the way back to the pandemic, I remember I saw a YouTube video of a guy talking about the warnings. It was an Asian guy talking about what was happening in Wuhan, where the I think it was first discovered. And they had shut down the city. He was mad because he said all the city officials had left town. They really wasn't telling people what to do. People had been locked in their houses for, a month or so. And I never thought at that point that it was going to come to the U.S. soil. Right. But if I'd have thought through it enough, I was like, oh, OK, this is during the Chinese New Year. People from all around the world are going back home to China. Then they're going to celebrate, and then they're going to leave, and they're going to go back to their countries where they live, and they're going to take the virus with them. And it never dawned on me as I was watching that YouTube video that this was coming to America, right? But having seen that and looking again what happened in India, now that's in America. So you can see here that we're tracking, for this. So you can look at Pfizer, you can look at Moderna. Moderna. So I can spell modern.
I think it's mRNA.
Yeah, mRNA. Thank you, sir. Yep. So look at this Moderna, right? Pfizer, Moderna, right? Same area that July, Delta variant. Up. Now we're going sideways. So if these stocks are in play now because what's going on, these are the corollaries to what we just looked at for the win in terms of the stocks that will bounce back once we get this thing under control. So it's just so if you look at one thing in the news that's happening, where Milton was looking at it, okay, I'm playing the contrarian view to what's going to happen when all of this stuff is over and we get back to some sense of, well, maybe not be over, but we can get out of this, chaotic space and things kind of settle down. What stocks are going to do well. So he's taking a forward look in terms of the win, whereas we're taking a kind of a real time look right now in stocks that are participating because of Moderna. Now, so let me ask.
So Mike,
yes,
so
ma'am.
To both of y'all's points, I was thinking the Moderna, Pfizer, and all that have already had their run because of, like you said, the ramp up of the vaccines. And to that whole point of looking ahead, I was thinking maybe to watch the airlines with the holidays coming up and all that other stuff. And then I was secondary going and then watch the hotels and the gambling places. At least that was what my brain was thinking.
That is very good. American Airlines and Delta. Yeah.
Great. And you all are starting to connect the dots. And and again, there's a lot of stuff that we know. But are we sitting back and start trying to put correlations together? So just like you said, oh, okay, let's look at the airlines. And even in a larger context, look at leisure, discretionary stuff that as long as people are free to travel, they do well. But when they're restricted, who gets affected? So hospitality, travel, things of that nature. So if you look in here at Delta, we can see what the stock is doing. Went down. Actually, it's kind of holding at this 37 level. Let's look at Delta. Let's look at Southwest. Again, peaked out, coming back down. Same thing, sideways. Let's look at I think American. Okay, peaked out, coming back down, sideways from July 19th. Right. So let's look at that July 19th on that. July 19th. Look at that. Just started sideways as well on that Delta, July 19th. Right. So all of these charts look very similar, right? So again, it's a play. If it gets worse, then these levels that all of these airlines are at, they may break lower to the next support level. In terms of Delta, the next support is 34. Below that is 29. Can it hold? Let's look at Southwest. All right, 48. 43. Let's look at Spirit. If I can spell. at Spirit. Same thing. 19th. Actually, this is out of those 4 that we looked at, this is the only stock that's below that July 19th bottom, where those other ones they're higher than that July 19th candle, whereas this has gone lower. So it's already at its second level support here, which corresponds to what happened back in January. So, but it's trying to bounce. This would be an interesting area to watch, this 22 on the Spirit. If it breaks below here, we might be in play back down to the 16. So interesting.
Well, we got Thanksgiving holiday coming up, so that's going to be a key indicator, I think.
Well, so I'm gonna ask you a key indicator in what context, Kurt?
In terms of whether people are going to start traveling again. That's going to be a deciding factor.
Okay. So when you said that, what made me think of immediately was, is that going to be a key indicator? Because is that going to be another super spreader? Because if people can travel, we don't have a handle on this thing, is that just going to be another opportunity for this thing to spread even more?
Yeah.
Interesting. But
Brenda,
go ahead, Milton. I think that was Milton talking.
Yeah, Brenda, are you thinking about scaling in now, or you're talking about maybe going all in on the trade?
I was thinking about scaling in on the airlines, and I need to do a little bit more research, because I did, to that point about leisure, wanted to see who was more doing business travel and who was more doing leisure travel. So I was debating on that when I was going to think about which one I was going to start playing with, just to watch it. Especially when I heard that Europe is starting to restrict us again. So I don't know. So that's what I was chewing on with these guys. Especially since they hit that little support there.
AAL. Okay. No, good. Hey, I like the way you all are thinking. And this is the kind of dialogue I like for us to have, where we're kicking around these ideas. We're bringing, different correlations that we're just trying to understand what's going on in the world and how this can affect and, how we can play these things. So great conversation. Let's see. You got Vanessa and Barry. Let me do Vanessa, then I'll get to Barry. What we got here, Vanessa? I know you had shucks. What was it? Yeah, NVIDIA, and then the water company FO. So let's bring those up. NVIDIA. Actually, NVIDIA, I think, has been doing really good in EDA. Okay. Yep, NVIDIA is still doing good. All right, talk to us about this chart here, Vanessa. Are you still on? All right, I'll go through it for, I don't hear. So looks like it's came back down as it's just, so here you can just see this thing stair stepping. So it's just another step up from where we are right here, just July 19th. I don't know what's significant about July 19th, but we saw that in those airlines. That was a big candle bar. But even here, we're getting these, it's here. So I use this point and that point. So NVIDIA, all-time highs, I believe, on here. Yeah, all-time highs, still going up. Looks like it's just a good hold. So that's, well, now let's look at this FO. This is the water company. Well, I'm sorry, not water company, water ETF. This thing is just steady, just ticking up. I put this in my watch list, and I've been kind of taking a look at it. At some point, I might buy some of this. Now, Curtis, this is pretty interesting, because I know you're into the agricultural field. Mm-hmm. Have you ever thought about water as an investment? Okay.
Not as an investment, but I'm thinking about it now. Look at
that. Absolutely.
Especially what's happening out in California. You got to look at that as well.
All right. Yeah. Tell us what's going on out there. I haven't been keeping.
They're in heavy drought conditions, and there's been some big major fights over water rights out in California.
Okay.
So that could be
and a lot of those out west lakes are drying up and having lower levels, and they're starting to do restrictions, and it's impacting the states and the cities and stuff that are downstream as the ones upstream start restricting what flows coming out. It's interesting.
Yep.
Okay, so expand on that a little bit. So what are some ways? So direct play would be water, right? But what are some possible indirect things from water do you think that can have implications on possible other industries or what have you? And anybody can chime in on that.
That's a good question. Wow. That's a good question.
So one of the things I think of is, will that actually then mean that recyclable technology, water purification, cleaning up the water, and maybe even chemicals, right? Who's in the water chemical treatment business? Could that be, could they get a boost? Because if you have limited supplies, then that resource becomes pretty precious. So can you clean it up and recycle it back through the system? You know what I mean? If you're not getting any new fresh water. And then, so that's just a thought. I don't know if that makes any sense or not, or if there's an investment play on that. The other thing could be is, how would that affect bottled water, and who are the, bottled water sellers, particularly out west, who do a lot of volume out there? Could that drive their prices up, right? So could water become a premium, not just for, sewer water and tap water in your home, but what about drinking water, right? Could that mean that, okay, out there in California, water in general is getting expensive? Does water become expensive for everybody in the country as a result? I don't know. I mean, just stuff to start, kind of thinking about, as it relates to that. So
that's a good point. Good point.
I'm sorry, Mike. I had walked away from for a second. I didn't know if you asked me a question.
Yes, ma'am. I had brought up your NVIDIA, and we were just talking about your water on the phone.
Okay.
What are you doing? What are you doing on the water here?
I'm gonna stay. I'm gonna stay. Like I said, it's a slow creeper, but I'm gonna stay. But I do have a question that's totally separate from NVIDIA and this.
Yes, ma'am.
Now I've been watching Ford and GM. I have it for as far as like a long-term investment, but I'm losing money on it. So I'm kind of like wondering, should I switch it out to get something else, or should I stay? I know long-term I should stay, but I'm just not seeing any benefit for having it right now.
Yeah, Ford off of these pandemic lows was the play. Now this is a weekly chart. So from 4 to 13, that was the run. So if we go to kind of where we are on the daily, so if we take this and let's pull this back a little bit, so we can say, hey, it obeyed, and now we're right here. So if you go in, you say, okay, now if you bought anywhere between 16 and 13, 16 and say 14, you're kind of down, right? And it's establishing a newer low here at this 12. So let me ask you, what was your reasoning for buying Ford and GM?
For the EV.
Okay. Oh, EV play. Now,
yeah.
All right. So, okay, I can see that. All right, let's look at this GM. Looks like GM looked like it was pretty similar off of these lows. Again, this is it's a daily chart actually. Let's extend that up. So it looks pretty close to what we saw on Ford. Let me see if I can do this. All right. So the Ford is the orange, and then the GM is the actual chart. So you can see that they're tracking very similar one to another, right? In terms of the way that they work. Looks like they both peaked out here in June, and they're slowly coming down to support levels, on both of those. Somebody else, what do y'all think about, Vanessa's question? What would be your recommendation if you held these now? You're looking at the chart and you say, hey, does it make sense to continue to hold these for the EVs, or should, cut my losses and run and go look at something else?
Doesn't it depend on whether it's a long-term or short-term investment?
All right, Vanessa?
It's a long-term.
I would hold, but that's just my opinion, because I think it's coming back into play ultimately.
All right, expand on that a little bit, Kurt.
That's the new push, and they've been trying to implement EV for the last several years. And I think other factors, I don't know what's driving the cost to go down now, but I know eventually there's a lot of money being pushed into alternative fuel sources, and I just think it's going to come into play. I just don't know when.
Okay,
that's my opinion.
Just to expound.
No, I was going to ask. So it'd probably be best to just go ahead and just buy more and just kind of while it's going down, just buy more and just hold on to it.
I think it's in a good support area. Anybody else?
Milt, I think I heard you say something.
Yeah. When you look at these plays, and I mean all car companies right now, are we in a paradigm shift? And I can tell you right now, we are. And some of these companies are going to be horse and buggy. And that's exactly what I mean. Horse and buggy companies. And how many of those are you guys going to invest in? So you need to do some deep research if you're going to hold any car company.
Yeah, extrapolate a little bit more, Milt.
Okay, it's in our lifetime, our cars are going to be electric, except for specialty cars. And that's because Europe and China are going to ban them. And our market, while it is enormous, it is not enormous enough to keep these car companies that make vehicles that run on petrol viable. So if the company does not have a good alternative fuel, electric, hydrogen, I'm not ready to give up on hydrogen, even though I don't believe in it. If they don't have the technology to switch, they're going to go out of business, and probably quicker than you think. Now, the good thing about Ford and General Motors is the government will not let them go out of business except. And I'll let y'all stew on what the accept is that will allow an American company that big to go out of business.
Anybody want to chime in on that? Agree, disagree?
I agree. I totally agree. Go ahead, Brad.
I was going to say, yeah, historically, what he had just mentioned, yeah, they definitely did major bailouts for those American car companies. And another thought to put in mind, to where he was talking about research, definitely look into how much they're spending or what their slant is toward the research of the EV. So, for example, Ford just converted their F-150, which is their highest selling truck, vehicle, whatever. And they've got now either a hybrid or an electric version of that F-150. So the American companies, some of them are trying to do that shift. And so to your point there, I would definitely research to see which ones really are trying to focus on it and capture it into this new market.
Also, I want to add, I don't know if you guys noticed, but they're putting up more and more of these stations for you to plug into. I'm seeing them all over the place now. So something's happening. There is a paradigm shift happening. Just something to think about.
Yeah, I want to say that, I don't know if it was in California or did Biden do something nationally that said that by 2030, 2040, a certain number of the American fleet or American manufacturer have to have a percentage of their fleet EVs. I don't think I'm making that up, but I didn't. I just kind of remember that in passing. Can anybody else agree or disagree with that?
I don't remember hearing that part, but I remember hearing something about part of the infrastructure is that they wanted to increase the number of charging stations all across the country.
Okay. Yeah. And so, interesting. I definitely agree with the sentiment that the government is not going to let Ford or GM go out of business, right? They employ too many people, and they're probably the last of our manufacturing based of any significant scale. Now, here's a caveat. Probably say back 2008, 2007. When Chrysler went out of business, right? They were bought by, I think, Fiat. I didn't think that Chrysler would go out. And so could that just have been an anomaly that you really only need 2 car manufacturers as opposed to 3? And I guess, Chrysler is still in business. I think they're just not US owned anymore. But even with the Ford and GM, I think Ford eliminated Mercury. I think GM eliminated Pontiac and maybe another sub line that they had.
Buick.
Yeah, Buicks. Was it Buick? I think they still got some Buicks. I thought it was something else, but they may have taken some certain cars, but I definitely know GM eliminated Pontiac. I know that one for certain. And I thought it was another brand that they eliminated. And Ford, I think, got rid of Mercury. They still got Lincoln, but I think they got rid of Mercury. So, but again, on that, would they let one of them fall? Probably not. And you think too, the biggest seller of I think Ford's their biggest selling vehicle is the F-150. So that's integral to their success. And then GM, they sell a variety of SUVs and cars and, muscle cars and as well as, and then, you think about Dodge. And again, I don't even believe that Dodge Chrysler is still American owned, but, they sell those Chargers and Challengers, fast cars and stuff like that. So so I don't see the government letting those companies go out of business, but they're going to innovate. Now, one thing I think for both of those companies, they're probably pretty well capitalized and they're making the switch over. You can go on YouTube and see some videos of that F-150 that's all electric, got some pretty good feedback on it. But I will say this, there's a bunch of competition in this space. So, could Ford and GM become a fraction of what they are today because of these smaller companies getting into this electric vehicle business? The thing that I think that can help Ford and GM possibly is they got enough money that they may be able to go out and buy a bunch of this technology to stay relevant. That's one thing. When you get a bunch of money, you can always buy yourself into any market, right? So it may be there. So, but going back, I don't know if we answered your questions. If you feel you got a good answer on that, Vanessa, in terms of should you hold Ford and GM or should you look to, now, what if you just wanted to stay in the EV space? Let's say if the consensus was, Ford and GM may be in trouble. Not that they're going to go out of business, but just from a stock perspective in EVs, do you all think that there's better EV plays if you just want to be in that space, but not
Mike?
Yeah, go ahead.
Before you go into that is very vital. But before you go in that, I forgot to mention short term. The reason the car companies are going down right now is because of the chip shortage. I'm sorry, I should have started out the conversation with that.
Okay. Good point, Milt. So the pandemic has cut a bunch of supply lines in manufacturing. Mostly, I think 90% of our chips come out of Asia, China, rim. And so with that, all these cars got, computer chips in them. There was a computer chip shortage that combined with a bunch of the auto manufacturers scaling back during the pandemic. They just started making less cars. That put an extreme amount of pressure on the number extreme amount of pressure on the prices of cars. So if you bought a car in the last, 8 months, you know what I'm talking about. You paid a lot of money for these cars because the supply was just so tight. And some of that was because of the chip shortage that Milton just mentioned. So this could be related to that. So could that just be a short-term phenomenon that once they get that figured out, these stocks may go higher, but you still got this whole, switch to electrification, that you got to be mindful of, and the competitors are coming. They're coming big time. So I don't know, Vanessa, if what you do with all of that in terms of making the decision. Do I buy more at this level? Do I sell or do I look to get into other, pure EV plays? So a pure EV play would be a Tesla, a NIO, a Lordstown Motors, a Liquid. Those are some of the other ones from an EV perspective. So.
Well, the fact that I'm trying to hold it long term, I think I might, and it's low. I think I probably might buy a few more and then just hope for the best.
Yeah, and so I would say this: if you're gonna buy a few more, diversify. Maybe go for one of the pure EV pieces. So let's say from this perspective, let's say you got $100, right? So you buy 50. If you got 50 shares of, $50 worth of Ford, $50 worth of GM. Let's say if you want to diversify and say, you know what, I'm gonna pick a winner. You know what? Actually, what is the name of that? I think I actually own it. Let me see if I can find it. So just like you did with the water, I think there are some ETFs on electric ETFs. Let's see if anybody can help me out. Oh, yeah, this is it. It's called Lit. It's actually I own this. So it's a global lithium battery, and so this could be not necessarily the full manufacturer of the car, but you could look at this. You can look at this as a play into that same space, but it's not just auto manufacturer related. It's battery technology in general. So it's lithium, global lithium and battery tech ETF. So if you were to say, hey, I got Ford and I got GM, I like that, but I want to stay in the electrification business, but not all of my investment tied to these auto manufacturers. This might be a good third horse to add to that portfolio and say, okay, now let me buy $50 worth of lit. And if you were to go and look at that in terms of global X lithium, I can spell. Let's look at the components of what's in this thing. Because again, any of these ETFs, they're just an aggregate. So if you go here, see the ETF, this is one. Now I want to find out what are the holdings. Thematic. Come on, where are the holdings at? Okay, here are the holdings, right? So some of these companies you may never even heard of, right? But these are the top 10 holdings of that. And okay, so let's see. I never heard of any of these top 5. Okay, got Samsung, I recognize that. Tesla, recognize that. Panasonic, LG. What else? So out of, I don't know, 40, probably 35 companies here, I recognize maybe 7 or 8. That's maybe 4 to 5, should I say? So, but you can see the breakdown, and even looking at this, if you were to buy this, what this will do, and I'm not suggesting that you buy. You have to make your own decision if you're going to buy it or not. But helping with the thing, what this shows me is this is a level of diversification, because a bunch of these companies, when you look at the tickers and they got these long tickers, they're not alphabetic and they're not less than 4 characters. They let you know that these are foreign stocks, right? But what that also tells you is that this is more of a global play on lithium and battery technology versus Ford or GM. It's just a U.S. play for the most part. Now they do sell, some of those vehicles in other countries, but I think probably the lion's share of Ford or GM revenues probably originate out of the United States. So I don't know if that helps any. If so I'll just leave it as that. So hopefully that
I like that idea.
Yeah.
Then the fact that it got Tesla in it, and I think that'll probably be good.
Yes, ma'am. And if this is long term, I think you're definitely on the right theme. You're definitely on the right theme of long term electrification, of automobiles and more. Great theme. I think that theme is gonna. If you say, you just ask a simple question like this: are we going to have more or less electronic devices and electric cars 10 years from now than we do today? The answer is absolutely yes, right? And 20 years, even more. So that's just the way it's going. So I think the theme is definitely investable. So, and as I say that, that's a good something to find in all of our investment themes. Think about big themes that have happened in our lifetime. Cell phone. What's another one? I had another one. Computers.
The internet.
Yeah, right. Cell phone, internet, right. Computers. All of those have been, multi-decade themes, right? If you'd invested in Microsoft, 20 years ago, Apple, I heard someone say that if you would have bought, I think the iPhone came out 2004, 2005. They said if you would have bought, because a lot of people bought iPhones in 2004, 2005, whenever they launched. If you'd have bought an iPhone then versus, buying a Apple stock versus buying an iPhone and just held it, you say you don't even know where that first generation iPhone is. But if you'd have bought that stock now, that $500 in Apple, 10 years ago, 15 years ago, is significantly more than what the actual piece is. So so that's an investable theme. Lithium and battery technology definitely is going to be an investable theme that's only going to be around and become more and more integral in our society as we go forward.
So just to add 2 cents there, because notice you mentioned Tesla too. Think about it though. Tesla's stretch is really for their autonomous vehicles. I don't believe it's really in that lithium battery space when you're talking about newer technologies. I thought that it was really taken off because it's leading that way with the autonomous vehicle type of innovations.
Yeah. Now, so let's look at it. Great point. Let's go to Tesla. And I think Elon has actually said this. They get all the play because of their vehicles, but I think Tesla is really going to be an electric company. So in
solar.
Cars and solar, right? So cars are just being one factor, but they got solar roofs, solar panels.
Okay, right. That's right. I forgot about that. Mm-hmm.
Yeah. So Tesla is trying to kill everything energy. So really think of Tesla as an energy company, an energy technology company. And cars is just a factor, but cars get all the play, right? Because, it's probably the second biggest investment that you make beyond buying a house, right? A car. But you can see that they're getting into these solar panels, and you just think the way that the world is going. If the grid and we saw this in Texas this past year, the grid went out, right? And it was crazy in Texas. I know we had colleagues that were working out of there that, literally in the winter, they had no power. So they were trying to, figure out ways to stay warm. I heard stories that, people were sleeping in their cars with them running just to, stay warm. So energy is going to just be that much more important as time goes on. So, all right. Did I get everybody? Oh, you know what? I probably killed Barry. You still there, Barry? Sorry, man. We went on a tangent there. Let's see what Barry has. Funny. I guess we covered him. Barry got Tesla, right? So we kind of inadvertently got into that. Barry, are you still on? Or can you talk? All right, so let's bring up the Tesla chart here for Barry. We can talk through it. But great discussion, guys. Great discussion. All right, so you can see what Tesla is doing here. Hit a high back in January, came down, bounced off this 628 level, went back up to the 7, bounced back down, came down to a lower point of this 5 level, and really it's just been running off the 5. Now, if we look at what it's been doing the last couple of weeks, still in this uptrend. So if we take this line and extend it, continue to extend it, keep the slope about the same, we're still staying above that trend line. I mean, keep holding Tesla. That's what I would say. If it we got to close above here, but it didn't hold. It came back up for that trend line. That trend line is still intact. You just had a violation, but again, it didn't hold long term. So the trend is still in play. So the 773 is our next level of resistance. If we get back there, we can see what happens if it holds, because you got here before and it broke down. You were much higher here and it couldn't hold that area. So this 773 is going to be interesting on Tesla. Let's see. All right. I think we went through everybody. Any other parting shots before we call it a day?